What's up, YouTube? Brendan from Market Makers. Guys, the markets are absolutely mental the last 48 hours. Just today alone, the Dow's been up and down 800 points. Yesterday was a historic dump and then a historic rally. It's been absolutely crazy. So what is Bitcoin doing? How does this affect Bitcoin? Guys, we need to dive into this because nobody can predict what the markets are going to do. The Fed meets tomorrow, okay? The Fed meets tomorrow. The markets could descend further. They could pull Bitcoin down. Bitcoin could pull out some type of rally, and that rally could turn into a dead cat bounce, or that rally could turn into a sustained bull rally. Okay, so let's look at the data. Let's look at the key support and resistance ratios that must be held. As you guys know, we're going to utilize Fibonacci, and you're going to be surprised and impressed, I think, how absolutely accurate this layout is going to be. So guys, let's go ahead and jump into this. What I'm going to do, I'll show you on the daily time frame. I already have it set up on the 4-hour, but on the daily time frame, I'm taking our selling climax candle to our previous up thrust down to our current spring candle in the smaller time frames, okay? So one couple of notes here, the 618, 39,604. Let me show you this on the 4-hour time frame. The 4-hour time frame, as you guys know, yesterday we talked about mini-coff, which is the Wyckoff on the 1-hour, filtering up to the larger time frames. On the 4-hour, the same steps are now present. Selling climax, automatic reaction, secondary test. We have established our trading range. We had a spring out from the bottom, exiting our trading range, springing back up, bullish candles. What is that? That price movement is roughly 33,000 to 37,550. So basically a 4,500 point move, okay? So a 4,500 point move, and now Bitcoin is in the last point of support. Now in a normal market structure, Bitcoin would be accumulating here, looking to break out, and it would encounter these key resistance levels, okay? At these points, it would either roll over, seek support, make a backup, which would be a reaccumulation box, and then move up from that, or it will lose that backup and a dead cat bounce and descend further down. But guys, we want to check for confluence. So what? I have a fib laid out, right? Anybody can lay a fib out. How do we know it's accurate? I teach this in the room. If you guys like this type of education, definitely consider joining our room, guys. The link to the Discord is in the video description, and you would love the information and material we provide there, as well as trade signals. Guys, let's look at this. So confluence, you see the fib levels here. You see the key levels, right? Let me go ahead and pull this down so you can see us a little bit better. All right, I think that's big enough for everybody's cell phone. Let's go ahead and look at the 34 EMA. Look exactly where it's laying on. It's laying on the 382 here on the 4-hour time frame. It's laying on top of the candle. You see that? Let's look at the 55. Look where the 55 is, just beneath the 0.5 fib. Okay, you're noticing a pattern here. Look at the 89, and you may notice these are Fibonacci numbers in my EMAs. EMAs are exponential moving averages. They are favored, weighted to the front end, okay? Normal moving averages are weighted evenly across the moving average. Exponential are weighted more heavily to the front. I use exponential moving averages only, and I use them with Fibonacci numbers only. Look at the 89, a Fibonacci number right at the 618. The most important number for trend health and welfare of the asset that you are trading, the 233. Look at your 233 right by the 1 fib. Okay, you see the layout. Even if you don't understand phi pattern trading, phi tool set, you can look at how accurate this is just looking at my screen for your key resistance areas. So what Bitcoin would have to do in a normal market structure is come up, tackle that 0.5, which is the 55, flip it to support, come up to the 618, the most commonly retraced to fib, okay, at 39,604, flip this to support, and then it would have to move up to the 1 fib. The 1 fib, again, is significant because it is 100% retracement of the move and a much higher bias, statistically speaking. I track everything with phi pattern trading with statistic analysis. Statistically speaking, much higher bias for continuation wave further up, and that's where that golden ratio, the 1,618, would come into play. But you got the 233 here. These are key areas of resistance. This is very important to watch, guys. Like I said, in a normal market structure, the Dow and everything was just going up and down, sideways, whatever, not dumping and then having historic recovery and then dumping again the next day with the Fed meeting the next day, I would be much more bullish. But this is playing out like you're going to find key resistance at one of these points, most likely the 618 or potentially the 1 fib, And you need to see what happens, because if you don't hold the 618, you're going down. We have trade setups in the room with Fibonacci patterns at these various levels for entries and exits, guys. This is very important to watch. You can set this chart up on your own chart and look at these key levels. You can rewatch this video to get those EMA numbers again from me, okay? But let's go ahead and look at this on the weekly time frame. As you guys know, as a trader, it's funny, I see comments, people saying, man, you're like a permabull. Then right underneath that comment, somebody says, man, you're so bearish. As a trader, I always look at the upside and downside. That's how I trade, guys. 95% of what I do is trading. I bought spot a couple of times, very rarely. I basically trade the market. So for me, knowing the trend, for the members of the room, knowing the trend is extremely important. I've had this pattern now since we made our all-time high at November 8th. I've showed you these measurements many times, but just quick recap so we can look at the accuracy of the trend-based fib. Very important for people that think some of this stuff is hocus pocus, okay? Let's go to the beginning of the bull run at the X point of the pattern, to the A point, to the B point. Look at your 618, most commonly retraced to fib, gave you the market top 66,530. Clearly you pierced above it, no candle closes below it, okay? And again, you can see the conformity, the confluence here, the 3 to 2 being used as resistance, right, for that trend. So then what we did, guys, and you guys saw me do this on this channel many times now, this is how I was able to predict the price movement of where we would descend to. Once we lost the 618, it was only a matter of time to getting to the 32,973. As you guys know, we talked about that many times, and I reminded everybody on Saturday about this, okay? Because that's important, because these candles are weekly candles. So when you're just floating here and you tell people, hey, you're going to 32,973, like, no, you're not. No, we're not. We're holding this. We're moving over. We were holding the 1 fib from the previous accumulation zone. As soon as we lost that, this was a matter of time. This is how fibs work at the key Fibonacci ratio levels. A lot of people in the comments are asking me, how come I don't have all these other levels on my screen? Why don't I have the 786, the 886? I have those when I draw patterns. But for market structure targets and for take profit targets, I use the key Fibonacci ratios. And again, statistical database analysis shows if we lose the 1 fib, okay, if we lose the 1 fib, you have a high bias to go on in a continuation wave down to the 1618, the golden ratio 5. Now, utilizing this previous all-time high to the market low to the current all-time high, that's how I got this pattern. This pattern marries perfectly at the 886 with this number, okay? But I want a current trend. Again, I want to see what other key levels of support, if there are any, because there's definitely support levels, right? What is the next key level of support? Big difference between a support level and a key market structure support level based on Fibonacci. So what I'm going to do, guys, trend-based fib, same concept, going to go all-time high to the selling climax candle, right? And then to the rebound of that candle. And again, as you guys know, what you're doing is you're drawing an ABC projection, right? That's all you're doing here is you have your A wave, your B, then this is your C wave projection, okay? That's what the trend-based fib is projecting for you. It's very important to understand that concept of price moving in waves. So let's look at this and look at our key support and resistance levels based on the current declination trend. And this is the next key support level. Look what you're at. You see that 34,914 has now become the 618. Do you see this? So you're resting on the 618. If you lose the 618, just like before, you're going to the 1 fib. The 1 fib is 24,288. Yes, you can have supports in here. Yes, you can have candles floating just like we did for weeks before, okay? You can definitely do that. But if you lose the 618, high bias, statistical analysis, you're going to the 1 fib at 24,288. If you lose the 1 fib, again, high bias, statistical analysis, you're completing the golden ratio move at 7,097, which again is in line lower than the 10,871, okay? So is it critical to hold the 618? Yes, it is absolutely critical to hold the 618, so you don't have to come down to the 1 fib. And if you do come down to the 1 fib, and again, it could take a day, it could take weeks, okay? But if you did descend to the 1 fib, you must absolutely hold that or the market's done. That's crypto winter. Is this a big declination between here and the 1 fib? Of course it is, guys. That's not me telling you Bitcoin's bullish if it goes to the 1 fib. I'm giving you the key market structures that must be held, or we're going to crypto winter. If you can hold any of these fibs, you can rebound from 24. And people say, we have a 24, that's going to take forever to make a new all-time high. You're at 28,790 here and you went up to 66K. So yes, it could take time. It would take many weekly candles, but you could rebound. Okay, that's the key concept here. Understanding what critical market structure means and why it must be held is not a bullish or bearish thing. It is a technical analysis fundamental, okay? And that's the difference between watching moon boys and watching perma bears. I want to give you guys a technical analysis of the market structure that must be held for Bitcoin to stay healthy, and if it's lost, where Bitcoin could go to rest in a tomb, okay? All right, guys, smash the like button for me if you like this video, if you like my videos I put out there, really would appreciate it. And again, our room, the Discord link is in the video description, guys. BitGet, our sponsor, with all the goodies. Use our link, no VPN, no KYC. Really enjoy making these videos for you guys. I will do an altcoin update. There's not a lot going on in the altcoins, so let me go, I'll make a video probably comprising of the altcoins I want to focus on, and I'll put that out there most likely tomorrow is what I'm looking at. But we'll see, guys. Let me know if you guys want to see anything in particular in the comments, and I'll definitely consider it. Okay. All right, guys. Have a happy day, have a great day. Happy trading. Talk soon, everybody.